Chairman.
Gentleman yields back. The gentleman from Illinois is recognized for 5 minutes.
Thank you, Mr. Hill. Thank you all for being here. Ms. Owen, Sheila Bair, the former Republican FDIC chair, recently said that there is strong consumer confidence in the FDIC brand and that customers are, quote, comforted by the FDIC insured sign on their doors. Would your customers agree with that?
I think it's very important to have it on our doors, yes.
Excellent. She said that because in direct response to reports that Trump's advisors and members of this so-called Doge team are talking about ways to reform or completely eliminate the FDIC. Stay vigilant. Number two, when you get a customer who comes in who asks for a loan from your bank and you're evaluating whether or not you want to issue a loan, what the interest rates are you charge, do you look at their payment history with their other vendors, debt and otherwise?
Yes, we work up a cash flow because we want to know that they can adequately service the loan that they're applying.
And just to be clear, if they have a history of non-payment or late payment, that's going to be a negative impact on their credit score, right?
Yes.
Okay. Last week, I spent most of my time with mayors, with contractors, with businesses who had signed contracts with the federal government and were asking me whether the federal government was going to welch on that deal, whether they should demobilize construction crews that they expected to come through, whether they could count on money that was contractually obligated to them. I'm assuming that our lenders are going to be just as diligent as your bank is and say, if you're defaulting on some of your creditors, why aren't you going to default on me? At some point, that leads to an increase in treasury rates. Would higher treasury rates help or hurt the community banking industry?
That's an excellent question. I'd have to really think through it because we have short-term loans and we have long-term loans.
Sure, and we just recently saw the FDIC bail out banks that all of a sudden had a squeeze because they had higher treasury rates, right?
Correct.
This administration is not acting slowly to destroy the U.S. economy. They're acting very quickly to destroy the U.S. economy, right? Higher treasury rates are not good. Last point, question for you. In response to in your exchange with Mr. Williams, you mentioned you had some concerns about privacy issues and making sure that information provided to regulators, doesn't leak out into the private. Would you have concerns if a bunch of teenagers who were unvetted by any security apparatus had full access to the Treasury payment system? From a privacy perspective, that is.
I'm always concerned about privacy and the protection of all of our customers and clients and all of our personal information. I'm not familiar with what you are speaking to.
Okay, this week, for clarity, for everybody understands, Elon Musk has put teenagers who have not been vetted, they've only been recently identified, who are controlling trillions of dollars of Treasury payments. This is confidential information, top secret information. They are going to decide who can go through and access this information. I have big privacy concerns about that. I would imagine that your customers might also have those concerns. And I can't believe that this is partisan. Look, this hearing is called Making Community Banks Great Again. I appreciate that out of deference to the majority, you all made nice comments at the start about how you also want to make community banks great again, and I share your commitment to make community banks great. I find myself questioning, when we say great again, exactly when are we referring to? Because if I look back in history and I say, when was there a point when we did not have an independent Fed? When was there a point when we didn't have an FDIC protecting runs on the banks? When was there a point when the robber barons were in charge of our government? When was there a point where the federal government refused to enforce the 13th, 14th, and 15th Amendments to the Constitution passed under Reconstruction in order to make sure that we actually honor our protection, our constitutional obligation to equal protection? And I'm going back to the 1890s. Oh, we also had really dumb tariff policies then. Any Ferris Bueller fans here? Bueller? Hawley Smoot tariffs, anyone? That was an era where we had a run on the banks, a recession darn near every 4 or 5 years. Of course, that led to the Great Depression afterwards. Is that the era we're going back to? I put this to all of you. You are all leaders in your own fields. The entire country right now is wondering whether we are going to stand up for the Constitution, for the rule of law, for making America greater than it is right now. Or are we going to stand and sit in cowardice and complicity with those who are trying to destroy it? That is a question for all of us here, and it's all of our obligation to move forward. Yield back.
Gentleman's time has expired. The gentleman from Wisconsin, the chair of the Financial